Sanjay Dongre, EVP and Senior Fund Manager at UTI Mutual Fund, joins in on trade this afternoon. Sanjay, surprised by the kind of cut we're seeing in the markets right now? Do you think it's just a rub-off of the pain that we're seeing in Asian equities?
Not really. If you look at the market from in the last 12 months, the market had run up by 20%. And there are when the market after delivering 20% return, obviously it will be always on the edge. And what the data or what information we got yesterday was that there is some kind of two views about the continuation of stimulus in the US economy, and that is what is spooking the risk on trade, and therefore that is what is reflecting in the commodities, and that is also reflecting in the other riskier markets like emerging markets, and India is no exception. So that's why we are witnessing decline in the Asian markets as well as the Indian markets.
Sanjay, where could this weakness actually take us? I mean, today we've seen a crack of 5,900. Do you think from now up until budget we may see another 100 points being knocked down, or do you think this is just a one-off event?
No, in the short term, markets could always remain volatile. I think what you have to look at from the market from the slightly longer horizon. I mean, it's very difficult to say what the markets will do in the next 10 days, 20 days. But when you look at the market from the 12 months, 18 months perspective, what you will find is that the market is still attractive. I mean, if you look at the market at 5,800, 5,850, the market is still quoting at about 14 times 1 year forward multiple, which is still slightly below the average valuation at which the market has quoted in the last 5 years or last 10 years. So, when you look at the earnings, what you will find is that the last 3 quarters earnings, the market, the earnings downgrade cycle has come to an end, and whether the earnings upgrade cycle will start going forward, it would be a function of the fiscal consolidation happening in the economy, and which should be obviously has to be accompanied by the monetary easing or decline in the interest rates. If that were to happen, then I think in the coming quarters we could see the earning upgrade cycle happening, and that will be a good trigger for the market to rally further.
What's your sense on the budget? Do you think it's unlikely to be such a major event from a market point of view?
My guess is that it will be mostly a non-event from the market point of view, because the Honorable Finance Minister has been visiting the parts of the globe, and he has been meeting investors and telling them that the next year he is looking for a fiscal deficit of 4.8%. So if that were to be the true, then I think there is a large part of the budget would be a non-event from the market's point of view, because if it's a 4.8%, then I think market borrowing could be somewhere in the gross market borrowing could be in the vicinity of 6 lakh crores, and that is what the market would be looking at.
Okay, Sanjay, and what about the kind of selling that we've seen in the mid-cap universe? Do you think this is only going to get more heavy as we approach the budget, or do you think it would largely be concentrated towards the high beta names from the index?
No, again, as I was telling you earlier, it's very difficult to pinpoint what's going to happen in the next 10 days, 20 days. I mean, for example, the kind of declines we have seen in the mid-cap stocks is again because of the fact that the domestic institution investors have been facing good amount of redemptions. So though there has been good amount of inflows from the FI side, but there has been the divestment. Sorry, there has been the divestment of PSU stocks which has happened in the last 2 months. Also, we have witnessed that most of the companies are coming out with the QIPs or offer for sale just to meet the SEBI deadline of June 2013. So in effect, the net amount going into the market is actually negative, and therefore, whenever the market is at a higher level, and that's where the mid caps, being a riskier asset, will always be under tender hook, and that is what we have witnessed in terms of decline in the market price in the last 1 or 2 months.
All right, Sanjay, thank you so much for joining in with that perspective on our equity markets. That's the view coming in from UTI Mutual Fund. Sanjay Dongre with that perspective.